Malaysia's economy in 2025 stands strong and resilient, navigating global uncertainties with steady confidence. Gross domestic product, or GDP, reflects a nation's economic health, capturing employment, income, consumer spending, and investor confidence. In the third quarter of 2025, Malaysia recorded 5.2% GDP growth, bringing the first 9 months to 4.7%. This momentum is driven by strong domestic demand, private sector investments, and the recovery of services and manufacturing. Despite exposure to global trade volatility, regional competition, and shifting commodity prices, Malaysia continues to push forward, embracing digitalization, technology adoption, and sustainable infrastructure. Bank Negara Malaysia forecasts GDP growth between 4.0 and 4.8% in 2025, supported by robust consumption, private investment, and major infrastructure development. With a diversified economy and forward-looking policies, Malaysia is set to sustain growth and strengthen its resilience in 2025 and beyond.
Malaysia's economy is demonstrating robust performance in 2025, showcasing significant growth and stability. The nation's GDP expanded by an impressive 5.2% in the third quarter, nearing the upper end of the government's 4.0 to 4.8% growth target. This growth is underpinned by strong domestic spending, a stable employment market, and a low inflation rate of just 1.3%. Key sectors like manufacturing are thriving, with industrial production growing by 4.9%. The electronics sector continues to be a significant contributor, driving innovation and export capabilities. Malaysia's total trade expanded by 3.7%, resulting in a substantial trade surplus of RM 50.3 billion. The recovery of exports and tourism further bolsters the economy, with scenic locations attracting renewed interest. Economic confidence is high, reflected in stable financial markets and the ringgit's strength at RM 4.21 against the US dollar. Government support through the Madani Economy Framework is pivotal, aiming to elevate Malaysia as an Asian economic leader. With expanding infrastructure and continued industrial growth, Malaysia's revised GDP outlook for the remainder of 2025 stands at a promising 4.6 to 4.7%. In 2025, Malaysia continues stable economic performance, yet households worry about rising daily expenses. The economy shows resilience, but increasing prices of essentials continue to weaken ordinary Malaysians' purchasing power. As a result, inflation and cost of living issues remain central topics in public discussions and policymaking. Department of Statistics Malaysia reports inflation in March 2025 at 1.4%. driven by higher costs in personal care, housing, and education. By October, inflation eased slightly to 1.3%, reflecting stable prices, yet living costs continued to rise. Business Today's survey showed that 77% of Malaysians struggle with rising living costs, impacting daily life significantly. The increase is sharpest in food, housing, utilities, and transportation, essentials Malaysians rely on every day. Long-term strategies on income growth, affordable services, and targeted support are needed for Malaysians' financial stability. This collective effort is crucial for a secure and prosperous future for the nation.
Welcome to Malaysia's labour market in 2025, a testament to a decade of growth and resilience. Unemployment rate projected to fall to 3% by 2025. This marks lowest unemployment in 10 years, showcasing robust economic landscape. The total employed individuals reached 17.03 million by September 2025, labor force of 17.54 million. Manufacturing factories hum with automated machinery, showcasing production lines without human presence. Modern restaurants and food premises are meticulously prepared for service, reflecting a thriving hospitality sector. Automated logistics warehouses efficiently manage goods, underscoring the nation's advanced infrastructure. The services sector thrives, with empty hotel lobbies and retail displays showcasing a vibrant commercial environment. Malaysia's natural beauty, from tropical rainforests to serene paddy fields, symbolizes underlying stability supporting economic progress. Smooth highway traffic illustrates seamless connectivity and infrastructure vital for sustained growth. As we look towards the future, Malaysia's labor market stands as a beacon of strength, strongest performance in a decade. This segment discusses Malaysia's position in trade in 2025, where exports and imports remain the mainstay of the country's economy, contributing significantly to overall economic growth. Malaysia's trade continued to gain momentum in September 2025, with a total trade expansion of 9.8% to RM 257.5 billion from RM 234.4 billion in September 2024. In summary, it was another surplus, indicative of Malaysia as an open trading country. Chief Statistician Malaysia, Dato Sri Dr. Muhammad Yusur Mahadin highlighted Malaysia's exports increased in September 2025 in line with the rise in re-exports and domestic exports. The strong exports continued for the third consecutive month, increasing 12.2% to RM 138.68 billion in September 2025, which was the second highest export value recorded this year. Export growth was recorded in all sectors, with the manufacturing sector being driven by electrical and electronic products, which posted the highest ever value and surged by close to RM 11 billion. Malaysia imports a lot of intermediate goods used in the production process, capital goods, and consumer goods. Imports rose 7.3% to RM 118.8 billion, while the trade balance recorded a surplus of RM 19.86 billion, marking the 65th consecutive month of surplus since May 2020. Overall, Malaysia's exports and imports in the year 2025 reflect stable performance, strong exports, imports supportive of production activities, and a continued trade surplus, all aspects that indicate Malaysia is an important player in global trade.
In conclusion, Malaysia's economy in 2025 is projected to remain stable, with GDP growth around 4 to 5%, supported by domestic demand and steady exports. Inflation remains manageable, and the labour market continues to improve with new jobs reducing unemployment. Overall, these indicators point to balanced and resilient growth, as reported by IMF and DOSM.